Now, pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Great. So next is public comments.
I will keep silent.
Anybody on the Zoom?
No public comments on Zoom.
Okay, so let's look at the minutes from last time. Is any changes or updates from anybody on the committee for the minutes? Seeing none, why don't we go ahead and approve the minutes? Do I have a second?
Second.
Seconded. Let's go ahead and vote.
Okay. Commissioner Claris.
I vote yes.
Commissioner Zhang.
Yes.
It's Commissioner Jane, Commissioner Fowler, Vice Chair Richmond, and Chair Oaks.
Yes.
Passes unanimously.
Okay, the first item or second item on the agenda is the preliminary audit results.
Yes.
And John, you gonna run us through that?
Not quite. We have online
Okay,
Ahmed Badawi, who is from the auditing firm.
okay.
Hey, Bob, your item's next. So we're gonna have you turn your video off if you don't mind.
Absolutely, no problem. Thank you.
Thank you. So we have Ahmed, and Ahmed will let you take it away.
All right, wonderful. Good evening, and thank you for inviting me to your meeting. My name is Ahmed Badawi. I am the audit partner on the City of Los Altos audit, and today I'll present to you the preliminary results of the 2024 audit. So allow me to share my screen. I'm going to just send a request here because it looks like I don't have authorization to share my screen.
You should be able to now.
Yep, I think so. All right, so hopefully you can see my screen now,
Yes.
and I am going to start the slideshow. All right. So this is a presentation, the preliminary results of the 2024 audit of the City of Los Altos. Our agenda today, I will let you know about our engagement team. I'm sorry, the deliverables and the scope of our audit, our audit methodology, just very brief, areas of primary audit risk, the type of audit opinion we are about to issue, and provide you some of the summary of the numbers in your financial statements, provide you some of the required communications as your independent auditor, a brief overview of the new accounting standards that are coming your way. So I'm going to start first by just a very brief overview of our firm and the engagement team. This is our first year with the city. So just want to give you a brief overview. And sorry, my slide is moving a little bit slow. So just on this slide, our firm, by the numbers, we have about 25 years of experience. We are a specialized firm. We specialize in municipal auditing, and we have about 65 government audit clients. We have about 44 cities that we currently audit. We have about 30 employees, and luckily so far we have 0 lawsuits or disciplinary actions against the firm. So that's just a brief overview of the firm. In terms of our engagement team, this was the composition of our engagement team. I was the engagement partner. We always have a quality control reviewer. This person is in the background. They're reviewing my work, making sure that we adhere to professional standards. They also provide a second review of the financial statements. We had an audit manager assigned to the audit. We had an IT specialist responsible for evaluating the city's information system. And we had 3 professional staff assigned to the audit. In terms of
Question.
yes, sir.
With regard to your IT audit, what do you guys go through?
I wouldn't say it's an IT audit. It is really just assessing the risk of coming from information technology. So things that we cover, for example, would be like logical access, access control, basically whether there's a regular review of who have access to what when employees move around and the role change within the organization or get terminated. We look at backup procedures, make sure that the data is secure. If the information is in the cloud, we normally obtain an audit report of the controls that provider have in place to ensure that the data is backed up and secure. We ask if there was any penetration testing done, if just about cybersecurity. So it's not really an audit, but it's designed to help us assess if there is any risk coming from the city's computer system that may be unable to generate reports that are needed for the audit and so on. So hopefully that gives you just a general idea.
Do you review the procedures the city has in place and whether or not they're being followed?
In relation to IT or to other?
IT.
So it depends. What we do is we do a walkthrough. So if the city tells us, for example, that we do require a password complexity of so and so, we would want the city IT to log into the system to basically give us a screenshot of what the password complexity requirements are from the system administrator. So if the city, for example, reviews certain logs, yes.
My question was, do you look at the city's IT procedures and first see if they're adequate and then see if the city is following them? It's kind of a yes or no question.
I would say no, we don't get to that level. We just really focus on whether there are some key controls that ensure that access is controlled and data is secure. But we're not doing an IT audit. We're not IT auditor. This is just really some additional understanding of the city's operating environment for our financial audit. So I would say no, we don't specifically go through all the IT processes and evaluate them, and then if the city is processing them or not, is following them or not.
I'll jump in really quick. So we do go through an extensive IT audit of all of our IT functions outside of, what Ahmed is talking about, what's related to finance. Through our insurance pool, it's a very extensive audit that checks, I think, a lot of what you're asking.
Thank you.
Is there a core package issued from that audit that we can access?
Well, we're in the middle of it. So I can ask them if they can present or prepare a short memo that I can share.
So shall I proceed or?
Yes, please.
I'm sorry, I didn't hear you.
Yes.
Thank you. All right. So I wanted to also communicate the deliverables and the scope of our audit. We're mainly responsible or engaged to provide an opinion on the annual comprehensive financial report. That's the city's basic financial statements. Because the city is subject to government auditing standards, we also provide a report on internal control over compliance and our consideration of internal control. We were also engaged to provide to perform an agreed upon procedures on the appropriation limit or the GAN limit. We were also engaged to prepare the annual financial transaction report. This is a report that we submit to the State Controller's Office. It's an electronic report submitted on their website. So we assisted the city with preparing that. We also assisted the city with the street report, the annual street report, another report that goes to the State Controller's Office. And then finally, the communication with the governing body, which is what I'm doing today. And normally we issue a letter addressed to the council, also summarizing this communication. The next slide here is just on a very brief overview of audit methodology without really getting into any details. Just wanted to communicate that our audit is done on 4 phases. First, preliminary phase or planning phase, and it involves communicating with management and just gathering information and documentation, reviewing prior year information, and just really getting ready for the audit, assigning the different staff and identifying maybe risks that we are already aware of. The interim procedures involve review of systems and processes. Again, we do conduct an interview with all the different areas from cash disbursements to cash receipts to payroll to general ledger maintenance and journal entries, and also with IT. But documenting those processes and controls and also perform walkthrough of those controls. And then based on that assessment of risks and controls, then we develop audit procedures to address those risks. The year-end procedure is when we come in and perform the actual validation and audit of the account balances. And then finally, the reporting phase is when we put the annual comprehensive financial report and any other reports together to be finalized. So,
Question.
yes, sir.
Will you tell us if there's any type of, what's the good term? Separation of duty conflicts where one person has multiple things that they can access and they are what's the term? I can't think of the term.
Business controls,
It's escapes me.
separation of duties.
Yeah, separation of duties. That, like, for example, we've heard rumors that HR is putting in payroll, which is usually a red flag for most organizations. Will you flag that and tell us what any particular control issue you have with regard to that?
Yeah, no, I mean, if it comes to our attention, of course, as either part of our interview or part of our walkthrough of those controls or our testing, then of course we would bring it to the attention of the commission. Again, we classify different observations in internal control as material weaknesses, significant deficiencies, and control deficiencies. Normally, control deficiencies are what we call housekeeping items that we just communicate to management without elevating to the governing body, just because they're not very significant. We only report the significant deficiencies and material weaknesses. Today, I think in the next few slides, I do have a couple of observations that I will share with the commission. All right. Also wanted to cover some of the primary audit risks that we identified during the audit. Before I go through those, I just wanted to highlight to you that there are no audits that have no risks. Any audit have risks that are involved. Obviously, a lot of the risks that we encountered with the city of Los Altos are common to many of our other cities that we audit. But I wanted to share some of those with you. So the first area is the risk of management override of control. And the way we look at it is that management is the one normally responsible for designing internal control. They are responsible for putting them in place and monitoring them. So oftentimes they are in a position to be able to override those controls. We have to design our audit procedures to try to minimize that risk. It cannot be eliminated, but at least it can be reduced to an acceptable level. So these are just some of the procedures that we perform to minimize that risk. We make sure that we assign more experienced personnel to more complex areas of the audit, to incorporate an element of unpredictability in our audit procedure, to make sure that accounting principles and policies are being consistently applied. We do testing of journal entries prepared by management. We review estimates, accounting estimates prepared by management to make sure that they are reasonable and free of bias. We evaluate business rationale for any unusual transactions and also evaluate the appropriateness of fraud inquiries and so on. Another risk that we identified as well is the risk of revenue recognition, improper revenue recognition. Again, this is a risk that auditing standards require us that by default assume that it exists. unless we can prove otherwise. So just wanted to share with you some of the procedures that we perform regarding revenues. So when it comes to revenues, we rely heavily on third-party confirmations. So we confirm all the large revenues like property taxes and sales tax and other significant revenues with third parties, and we reconcile those to the accounting records of the city. We also perform analytical procedures and testing of material revenue items and review backup for those items. Estimates. Estimates are always a risk in an audit. So just wanted to share with you some of the numbers that have estimates involved in them. Useful life of assets, pension and OPEB related estimates, and claim liabilities estimates. I actually apologize. I mean, obviously, there was another risk that we considered. I accidentally omitted from my presentation is obviously the risk for 2024 of just the turnover that occurred in finance. So that was also a risk that we considered, that there were times where transactions were not recorded for a certain period of time, but then the city got caught up. So that impacted our sample sizes and impacted the transactions that we looked at. But at the end, we felt that the numbers were actually in good condition after all of that. So, but it is a risk that we considered as well. And my apology that I omitted that on my slide.
Just a question on that. Is that a matching problem where the encumbrances weren't identified early enough or what?
Which one, I'm sorry?
I just want to make sure if I'm understanding, was it a matching problem where the encumbrances weren't matched with the right period?
Relating to which risk?
Just as an audit risk. I mean, how do you feel the city is doing with identifying encumbrances in a timely manner with the time period?
So I guess so encumbrances are not really considered expenditures from a GAAP or an accounting standard perspective. What we normally do is we do test of what we call unrecorded liabilities. We go over disbursements after the end of the fiscal year to make sure that if any of them belong to that fiscal year, that they were accrued properly. We scan through cash receipts subsequent to the end of the fiscal year to make sure that we don't see anything that belongs to the year that should have been accrued as receivable. So those are just some procedures to make sure that as far as timing, that revenues and expenditures have been accrued based on when the service was provided or when the revenue was earned. I'm not
You
sure.
felt comfortable at the end that the matching was done correctly. Expenditures were matched in the right period.
You're asking me if expenditures were matched in the right period? Is that the question? I'm sorry, I couldn't hear it.
That's the question.
Okay. Again, yes, I would say in general, yes, the city used modified accrual basis of accounting for its governmental funds. So the matching concept does not exist in that basis of accounting, meaning that we don't match revenues with expenditures because revenues are not directly related to the expenditures incurred. For example, property taxes come in, they're not necessarily related to expenditures being incurred. However, we of course verify to make sure that if the city have received services, that the cost of those services have been recorded as expenditures during the fiscal year that the city received those services or those goods. So that is obviously part of the procedures that we perform.
Okay. Thank you.
Of course. All right, just 1 second. I'm trying to go back to my, yeah. Right. Just also wanted to go over the auditor's report and just a really brief overview of the numbers in the financial statements. So the auditor's report will basically state the auditing standards that were followed. And those are the generally accepted auditing standards and also the government auditing standards. We are prepared to issue an unmodified opinion. An unmodified opinion means that we believe that the financial statements are fairly presented in all material respects, that all significant accounting policies have been consistently applied, that all estimates are reasonable, and that all disclosures are properly reflected in the financial statements. Just wanted to also provide you a very brief overview of the numbers in the city's financial statements. So on this slide here is a summary of the city's assets over the last 3 years. As with most of our cities, the two largest assets that a city normally have would be the cash and investments and the capital assets. I would say that the numbers have been fairly consistent. I mean, increasing cash is the results of operations, but otherwise the numbers seems to be fairly consistent over the years. On this slide here is the summary of the city's liabilities over the last 3 years. And again, some increase in net pension liability, which we saw in pretty much all CalPERS participants. But other than that, again, fairly consistent year over year.
I have a quick question. I don't know if you can answer or John. What is our average? We have the accounts payable. What's our average payout for accounts payable for suppliers? Is it 30, 60, 90 days ballpark?
We put checks every week.
Well, I understand you cut checks every week, but I just wonder how long it takes after I present an invoice. I don't do any work for the city of Los Altos, but how long before a supplier submits our invoice do they get paid?
I believe the city's policy is 30 days.
Yeah.
Of course, that's dependent on, it getting entered in a timely
Sure.
manner and
But what's the average? I mean, what are we paying at? And the reason for the question is I've heard through the grapevine that contractors don't like bidding. And one of the reasons they don't like bidding is slow pay.
Yeah.
And since we're staying on a boatload of cash, that ends up costing us more money in the long run by not having enough people bid. And so my question to you is, how quickly do we pay our suppliers?
I would say on average, it's less than 30 days.
Okay.
For on
So we're not
average.
stringing them out. And the reason I asked is I noticed the accounts payable went from 3 to 5 over just a few years, and our revenue hasn't changed that much. And that usually means that you're stretching out suppliers.
We did have a time years ago where we were behind on a lot of invoices, but we've caught ourselves back up, and I'd say with average within 30 days.
30 is very reasonable.
Amen.
Thank you. All right. On the next slide here, just a breakdown of the city's equity or net position. This is just assets minus liabilities. So the equity is divided into 3 categories. The first one and the largest one is the net investment in capital assets. This is an amount that is not in a spendable form and most likely will not become in a spendable form. This is how much the city invested in streets and roads and buildings and other fixed assets. So that part is really not in a spendable form. Then there is a restricted amount, and this amount have a third-party legal restriction on it. So it can be a variety of things, from unspent grant proceeds, unspent bond proceeds, gas tax. So a variety of things that are restricted for a specified purpose. And then finally, the unrestricted amount are the amount that are under the council control that have no legal restriction on it. Please keep in mind that this is all the city combined, so all city funds. So this is just really a very 30,000-foot view of the city's numbers and equity. On the next slide here, just comparing what we call the net cost of service to tax revenues. So the net cost of service is the cost of running city departments minus any revenues that those departments bring in on their own. So any grant revenues, any fees to users will reduce that net cost of service. We normally compare that to the tax revenue to see whether the tax revenues are sufficient to cover the net cost of service. For 2024, tax revenues were about 48 million and net cost of service was about 44. So that is higher than the net cost of service. You can see that there is a fluctuation from 2023, and that usually happened when there was a big grant in the year before that offset that cost. Also, pension cost in 2023 was, for most organization, was a big negative, and in 2024 is a big positive number. So there was a big fluctuation there that also caused that net cost of service to fluctuate. You can see that the tax revenues are obviously continuously increasing, but there were times in 2022 where the net cost of service was slightly higher than the tax revenues. So this is straight from the financial statements, by the way, from the government-wide financial statements. If we were to focus just on the general fund, this slide here just summarizes the unrestricted portion of fund balance, and we compare that to total expenditures for the year. The idea is to see how many months the city can probably continue to pay bills using existing fund balance. The fund balance of the city, of the general fund, has been increasing over the years, and right now is at about approximately 10 months. So that's definitely a healthy fund balance, and it's clear that it's been increasing year over year. So that's just focusing on the general fund. And then the next couple of slides are just really focusing on the pension and the OPEB liability. So on this slide here, bring it to your attention that the pension liability is an estimated number, and one of the most significant assumptions in that estimate is what we call the discount rate. So accounting standards require us to disclose that what the liability would be if that discount rate changes by 1% up or down. So currently, if you look at that middle row, this is the rate that the city is using, which is currently about 6.9%. That's the CalPERS rate. So under column 2024, the city's liability is about 47.5 million. However, if that discount rate decreased by 1%, that liability can go up to almost 71 million. And if that discount rate increased by 1%, it can go down to 28 million. So you can see that the number fluctuates significantly with a small change in the discount rate. Again, currently the discount rate is the 6.9%, and that's the middle row, the current rate. Similar to pension, but a much smaller liability, is OPEB, which is the other post-employment benefits, the retiree medical benefits. So I just wanted to show you also the impact of the discount rate on the estimate of that liability. Currently, this liability is around 731,000 as of 2024. The last part of my presentation is what we call the required communications as your independent auditor. On this slide here, I just wanted to highlight our responsibility as the independent auditors versus the city's responsibility. So we are mostly responsible to provide an opinion on whether the financial statements are fairly stated or not, to evaluate internal control over financial reporting, to evaluate compliance with laws and regulations, to ensure that the financial statements are transparent and clear, and to communicate with the governing body. Management have responsibilities, such as management has to take responsibility for the financial statements. So our audit does not relieve management from its responsibility for the completeness and accuracy of the financial statements. Management is responsible to establish and maintain internal control over financial reporting, make all financial records available to us, establish internal control to prevent and detect fraud, inform us of all known and suspected fraud, comply with laws and regulations, and then take corrective action on audit findings. As far as independence, it is solely our responsibility to maintain our independence, and we adhere to the AICPA and the California Board of Accountancy rules. We have to evaluate any additional service that we offer the city and evaluate whether it impair our independence. Assisting in preparing the annual comprehensive financial report is a service that could impair our independence if we don't put safeguards in place. So the safeguards is that we make sure that we have someone independent from the audit that provide an independent review of those financials before we issue them. And that's our quality control reviewer. As far as timing of the audit, within the time frame originally communicated to the city, I mean, obviously the audit is a bit delayed this year, but that was the anticipation, given the turnover when we were first engaged, that there will be some delay in the audit. As far as significant accounting policies and unusual transactions, so this year the city adopted a new accounting standard, GASB Statement Number 100, and it's just a standard that set the rules for how we display restatements in the financial statements. So anytime there's an error correction or a change in accounting principle, it set the rule on what should we display and how we should describe it and disclose it in the financial statements. I'm pleased to say that we encountered no difficulties during the audit, that even though the city had turnover and there were periods where transactions may not have been recorded timely, but the end result seemed to have been appropriate, that we didn't have many adjustments, and the accounting records at the end seem to have been fairly stable. So as far as significant audit adjustments, there were some adjustments and reclassifying entries, and management has posted all of those adjustments. And in terms of the deficiencies and internal control over financial reporting, so we had, as I mentioned, 2 items that we identified. Control over the journal entries, that we noted that journal entries prepared and approved by the same individual. Basically, the system does not prevent that from occurring, and it did occur in some occasions throughout the year. And I understand that obviously there were some individuals that came in to try to catch up and record transactions, but we always want to see somebody else approving the entry, not the preparer who prepared the entry. The other observation was relating to the vendor master file maintenance. So AP technician can create new vendors in the system without independent review. So a fictitious vendor can be created. So we're recommending that either this access not be with the AP technician, or that there is a report generated to review the changes with every check run.
Question
Yes, sir.
for the first deficiency, is it just that particular entry or those entries were corrected or approved, or is it like a systemic guardrail now in place so that it doesn't happen in the future?
So the entries themselves, there was nothing wrong with them, like they were correct entries. It's just that they were prepared and approved by the same person. But the entry was legitimate. Was a legitimate entry, properly supported. There was nothing wrong with the entry other than it's just that the same person is preparing it and approving it.
But going forward, can this happen again, or do we have guardrails in place?
Yeah, so obviously we would be looking for the city to develop procedures to address those. We normally recommend, obviously, either the system can limit that, so it does not allow the same person to prepare and approve their own entry. It can be by a report that is generated of the entries that were prepared and somebody else reviewed them to make sure that all entries were reviewed. So there are a variety of ways for the city to be able to address that.
On that, Jesse, can you speak to that?
Yeah, we already implemented the procedure, so yeah, same person can approve the EP. Also, yeah, for the
So you have a procedure,
vendor
there's a
ID.
separation.
Yeah.
I have a question. We're currently going from Central Square to Tyler Technologies, and I believe the cutover is in June sometime.
July 1.
July 1. There's going to be quite a change in the chart of accounts from Central Square to Tyler. How are you going to handle that transition since they're basically going to be different buckets going in and out?
I guess, John, with all due respect, that's 2 audits from now.
That's 2 audits from now?
Yes.
Okay, because I was giving them a heads up that they could see it.
Right, but they've got to audit June 30th, 25 before you even have that data.
Well, I guess my question to them is, how would you prepare for that? And what information, please?
So we have a crosswalk.
Okay.
So we can just refer to new account from old account. So they will get the new account, chart of account from us.
Okay, so there's some sort of transfer document that shows what goes to
Yes.
where,
Yes.
so that somebody can just
Yeah,
follow it
we
through.
will have all the groupings.
Okay. Thank you.
And of course,
So-
during a year like this, because we perform analytical procedures, we always compare prior year amounts to current year and to budgeted numbers. So when you have a change in account codes, and it makes our analytical procedures more challenging. It does take a little bit of time when there is a change in system and a change in accounts and groupings. Also, the setup of the financial statements is usually based on those account codes and groupings, so we have to update that as well. But it's just part of what we have to do. But yes, it does take a little bit more to deal with that.
I have another question. Do other cities use ADP other than us?
Yeah. I mean, I'm not going to say most cities, but definitely we have several clients that use ADP.
And does it work well for them?
I guess it depends on the size and complexity of the client. I think most larger cities have their own, do their own payroll and don't use outside providers. I've heard of some challenges with some clients. Maybe some of ADP maybe not understanding some of the uniqueness of government and overtime and firefighters and things of that nature. But I think for the most part, it's still it's a good system. I would say I have several clients that use it. But yeah, there are definitely some questions that sometimes come up from using them.
Okay, maybe back on this audit for a sec, couple of questions. So on your significant deficiencies, I gather the journal entry item is not a material weakness because you can test over it, because you can identify where there wasn't a second approval and prove up the entry. Is that fair?
Yeah, obviously, if we had some issues with the journal entry testing, or we felt that they were not properly supported and still approved and prepared by the same person, then yeah, we can definitely elevate that. But we didn't have any errors in the journal entries that we tested. So we didn't really feel that there was any errors that occurred. But it's just that somebody approving their own work. First, there are rooms for errors not getting detected, but then also if the entry should not even be done, that may not be detected.
And then on the AP file one, which is kind of a big hole, how do you test for that and satisfy yourself it's not a material weakness?
So, I mean, obviously, we do test expenditures throughout the year. So we have a sample of expenditures from the beginning of the year all the way until the end of the year. For each of those items, we normally obtain the supporting documentation for the payment that made to the vendor, whether the contract, the invoice, any related purchase orders, any related documents, and we evaluate those. We also, during our search for undercoded liabilities, we test additional expenditures for subsequent to the end of the fiscal year. So normally, if there is a fictitious vendor and a payment went out to that vendor, there may not be the proper documentation or support for it. Also, if it's something that is material, it can show up in budget to actual report from department heads that there are some discrepancies there. But I also I don't want to make a statement saying that nothing happened, because an audit is not an absolute assurance. We only look at a sample based on our risk assessment. So even though it provides reasonable assurance, it is not an absolute assurance that nothing happened. At least nothing came to our attention.
Got it. So one more, this is your first year through it. How did your hours that you put into the job compare to what you budgeted on the way in?
I think it's probably within an acceptable range of what we estimated. I mean, we're not done, so I don't have all the final hours. But we audit mostly governments, and within the governments, we audit mostly cities. So we normally have a pretty good ability to figure out how long it's going to take for an audit like this, and the nature of the account balances, and so on. So I feel like we'll be in acceptable range.
I was just trying to figure out the extent to which we had a lot of turnover, whether that caught you throwing more time in it. Sounds like not.
No, because during that time, really, we weren't doing work. The city was the one doing the work, catching up on recording the transactions and getting ready for the audit. So we were not really incurring the hours at that time. The city staff and the assistants, the consultants were the one doing that.
Okay, and then my last one's more over towards Jesse. So I can't remember the last time the finance group was fully staffed up here. So, and we're always kind of racing towards March 31st, right? That's the statutory. When were we required to send this stuff to Sacramento? Was it March 31st?
For
the audit. There's a filing date requirement. I'm sure I don't misremember this. So we can look it up.
The March 31st is normally the deadline if the city was subject to the single audit, which is the audit of the federal grants. I believe the city this year was not subject to that audit. So there's really no filing deadline other than obviously the GFOA award, which is normally due December 31st. And then if you don't make it, you file an extension for that. And then the state controller's report that I mentioned earlier, that was due on January 31st, and that was submitted. So there's really no other official deadlines. But
here's my question. It's only partially on the audit side is what's a reasonable target to be done? Right?
Yeah, no.
I wouldn't, let me finish. So I wouldn't think February 15th against June 30th what we'd like to be tuned up and say, we'd like to do that. I mean, this information's pretty oldie and moldy by then anyway. And I come out of the public company world where we're all done on the 45th day. So how do you guys think about, and we're obviously not going to staff up 10 extra people to get done in 45 days, but when you think about a reasonable expectation with a stable staffing level and a new system you have some comfort in, what's a reasonable target to be done? You can come back to us, but it's not, I don't think it's February 10th or whatever today is.
It's not. And I will say from my perspective, I'm used to, we have gone to the city council and presented the ACFR by now.
Yeah.
And so I would hope that in future years, because Jesse's here and has got a great team that's all going to stick around and we're not going to have any more turnover.
I love to do stable.
I would hope that we would be at least a couple of months earlier than we are right now.
Yeah.
So are we fully staffed in finance now?
We have one vacancy still.
All right, so I think I have nothing more to ask other than I think in connection with
planning for June of 25, then you guys would come and say, boy, we're gonna bring this in. We're not gonna mess up our Christmas sport, but you know, what do you think's within the realm of the possible to get this done? Okay. Scott, I got nothing.
Okay.
No, thank you for that question. I definitely would agree that middle of February is not the target that anyone should be targeting. For most of our clients, we have some that issue as early as early November, and most target mid-December. That's what most of our cities do. And then we have a few that goes past December. So just general idea. All right. And I was actually almost done with my presentation. So just my last slide here is on the new accounting standards. So this is a listing by the year of implementation. So there are a couple for 2025 and a couple for 2026. And how we normally address those accounting standards is that we have an exit meeting with management after each phase of the audit. We discuss the audit, and we also discuss those new standards and how they can possibly impact the city. We also host a training seminar during the summer. It's an in-person seminar where we go in great depths over those standards and other topics, and we invite all of our clients. It is free of charge for all of our clients. So that's how we bring to our clients' attention about the new standards and how they will impact them. And that concludes my presentation. So I want to say thank you for allowing me the time and for allowing us to provide service to the city. And
Great, thank you. Thank you very much.
Thank you. It was very good.
Very good.
thank you.
Okay, should we head to the next item on the agenda then, which is the investment policy and quarterly investment report?
Thank you, Ahmed.
Thank you very
Thank
much.
you.
Good night.
Very good.
Okay, so for the next item, we don't have a formal presentation. You have the documents in your packet. We do have the team from Public Trust Advisors here to answer any questions, as I believe this is the first time that we've presented a quarterly report from Public Trust.
Yeah.
Okay, all right.
Came in.
Okay.
I think John's point is that was on the way in. This is the first time I've ever seen their published.
Okay, yeah, that's what I was getting. And I apologize that we missed, clearly we missed September 30th. That I would say is more of my fault than anything. But you have the 2 quarters for 2024. And like I say, since it's the first time seeing these reports in this format, we invited the team from Public Trust to come and answer any questions that you might have on those.
Will we start with an overview then? Do we have, do you have a presentation?
So there's no formal presentation. It's more you have the reports, and typically we would not have Public Trust here, but like I say, since it's the first time seeing the reports, if you have questions on formatting or what does this mean, what does that mean, they're the ones to.
How much cash do we currently have on hand?
Cash you currently have on hand?
In bank,
Actually in the bank,
now we have 20 million.
20 million. How soon can we get that off to investments, and how much do we need over the next 3 months?
We're gonna transfer to Wave tomorrow, $1 million. We will leave 4 million back.
Because one of the things we discussed with these gentlemen was creating a more of a treasury function where you guys could spread your cash flow, because your cash flow is pretty known, and so that we can keep the minimum amount in the bank for current needs. Are we doing that between the 2 organizations? I'm not seeing them nod.
We just started the conversation. Yeah, we're working together.
Yeah, at 4.5% interest, we now care. Yeah, 4% of 20 million is actually a surprisingly large
Yes, I'm not sure if those are from us.
great to see you all. We're here to answer any questions you would like from us, but I would say that we've been working very closely with Jesse and Gabriel and previously with Stephanie. And since we met with you all last spring and in the summer, we've taken a number of steps to take that training approach, if you will. And part of that involves really starting to create different duration strategies based on your short, medium, and long-term needs. So that's really what we've been on the last couple of months to put that in place.
Hey, John, your audio, we're getting a lot of feedback on it, and we're not exactly sure why.
Okay, you know what? Let me try this other option. Give me one more.
He's working on that. I will say, I know you've heard this quite a bit, but with the turnover and Jesse coming on board, we've been trying to catch up and take a number of steps. And this is certainly one of the steps that actually Jesse just came to me today and said, I need to transfer some money to Leif. And I said, great. So
we want to just encourage it in the most friendly way.
yeah. So she's certainly working with the team at Public Trust to make sure that we're not just, tucking $20 million in the couch cushions and.
Well, the competition would be bad, but just sitting and rotting at the bank at 0.01% interest rate isn't good.
Yes.
So I can't get access to it right now for some reason, but I mean, can we start with kind of some highlights then to give some context of what's going on in the portfolio and
Would you like me, how about I pull it up? I'll pull up the December 31, since that's more recent and I think more relevant.
I guess, kind of what's in it, what's the return, what's the some of the key highlights would be really good. That'd be great.
Can you hear me a little better now?
Oh, much better.
Okay, great. And please let me know if you all want to answer that with Jesse or Gabriel or John, or if you would like me and Bob to cover any of these questions or to go over some highlights of the portfolio, and we can tie that into a little more of the detail of what we've been working with the city on with regard to that strategy I mentioned.
If you don't mind, a couple of the highlights from the portfolio.
Would you like me to share my screen? Would that be easier, or if you're good, if you have it there?
Sharing the screen would be wonderful.
I have
Okay.
it. I'll call it up here.
Okay, thank you.
So this is the December 31.
Perfect. So,
And other than the eye chart, is that 52,954 on the lower right?
yes.
Okay, got the right page.
It's on page 212 for videos. 212.
The September one.
September one?
Yeah, this is the December 31.
Oh, forgive me. What page is that?
288.
288. Thank you.
So it should have an ending balance in his little table there of 52,954.
Great. And I just want to make sure everybody's on the right page before I jump into a couple of these highlights.
You see that?
Have at it, John.
Okay, thank you. So just a couple of highlights. On the top left, you'll see the characteristics. And the duration there in the top, of course, is your average maturity, essentially. What you'll notice is that it's now drifted through the end of December down below a 1-year duration. And really where we want that to be is closer to 1.75 duration. But what we've determined in working with the city is that there are some capital projects that will likely need to be funded in the next few years. And so when we have that particular situation, what we want to do is we want to allocate those funds that will be needed for capital projects out of this particular portfolio to provide that, because this portfolio, if you recall, historically was just continue to be reinvested and not allowing anything to mature just by the nature of the strategy, which is common, but more for reserves. So what we've done is Again, taking this 53 million essentially, we're going to take 10 million of this and put that in in a liquid strategy, working closely with Jesse. As you all know, those liquid funds are still paying well over 4%, which is a great thing. The idea is that those funds would need to be used in the near term, and we continue to have conversations and evaluate those needs. Then taking another portion of the portfolio and laddering it out between 1 and 12 months, potentially 1 and 18 months, depending on the needs as we move forward. And then leaving the balance in this core portfolio that you've historically had, which again has that duration of anywhere from 1.5 to 2 years. And really what that does is it allows you to have funds liquid for your short-term operational needs. And then it allows you to have some funds available to be spent through 1 to 2 fiscal years through that laddered strategy, and then maintaining a portion of those assets in the core portfolio, more of reserve funds. These aren't stagnant amounts that we're talking about. It was really just to get started to have this diversified approach put into place for you. And then as we move forward, if it's determined there's more or less that are needed short term, we can always move those into this core portfolio and have them more in a reserve strategy. The good news is, even though we've been passive in the management, just as we're working out the details of this multiple duration strategy approach, the book yield on the portfolio is yielding just shy of 4%. You can see that on that corner chart there, third row up. So it's below what the market is, but that's, as you can see, the market's moving, and so that market yield will move, but your book yield is actually increased a bit. And once we have this all put into place with these different strategies, we will start to be able to actively manage both of those in accordance with the targeted duration and strategy. On the bottom right, the income summary, just to highlight, again, the income is a lot better than it was, of course, as we know, 2 or 3 years ago, when rates were closer to zero. So this portfolio has been able to, and we were reinvesting for a period of time. We went to a little bit of a pause, of course, until we figure out the asset allocation. But in the meantime, it's generating close to 4% in income on an annualized basis, that 3.929 number, and that's providing this level of interest income. This is a quarterly statement, so that's what you're seeing for that December 31st quarter. It's very diversified. Oh, yes, let me pause. Sorry.
I assume ABS is asset-backed securities. Can you
Yes.
give an example of what those type of securities are? Just kind of educate me.
Sure. And for the record, these asset backs were purchased by the prior manager, but I will tell you that we did a full credit review when we came on board, prior to coming on board, and we don't have any issues. But these asset backs, I'm just looking at the holdings. Let me get to those so I can just make sure I'm speaking to the name specifically, because you also have a good healthy balance in corporate notes as well. But generally, what you'll see in asset backs in the fixed income space are generally credit card receivables and auto trust receivables are the main types that you'll see here. I will say, looking at theirs, just to confirm, these asset backs are, I'm just making sure every one of them fall in. Every one of them are AAA rated. And I'm happy to get into more details if you'd like, but generally speaking, when we're looking at the asset backs that are purchased for public funds entities, they're really over collateralized in the trust, so meaning that, and then they're top tier or top tranche, meaning that these particular securities are paid first in that waterfall payment approach for these asset-backed securities. But generally, back to your original question, primarily are auto and credit card receivables.
Are you seeing any degradation in both auto and or credit card? Because we're seeing stuff in the Wall Street Journal all the time that credit card debt is starting to become an issue. So are you seeing anything bleeding over to the bonds?
Not into this class because these are the top tier. And so the other point I'll make, that's a great comment, by the way. We talk about that a lot in our economic reviews of the amount of consumer debt out there. It's like a race between the federal government and consumers who can have more debt. But with these particular security, look, there, I want to be very clear. There's a risk with any investment, right? So I put that, but these are the highest level of these asset backs. These are generally pools of borrowers that are much higher credit quality, if you will, higher credit scores. When you're looking at these types of securities, whether it's asset backs or mortgage backs, or very similarly, it's not just the issue itself, but you're also looking for those top tier credit quality type pools of loans.
Or John, the top of the waterfall, so the lowest loan to value, probably 70%, something like that.
It's usually very high. Not only do you have you generally have a roll up to a I'm trying to think of the like a JP Morgan that's gonna back these pools, and if they're the top the entity that's creating the trust. But then just for an example, maybe using your 70%, if you have $1 billion in loans, they're only lending out 700 million of those. So you need to have a 30% default rate before you even start to hit a bigger issue. And that's going to hit the lower tier tranches before it hits these.
Thank you for the education.
Absolutely. So it is well diversified. One of the comments I would make is over time, we'll look for, when you look at asset backs in particular, they can provide, we like them for our portfolios when they make sense, just for the record. But what they do, because they pay monthly interest and principal, it makes it a little more difficult when you're trying to manage cash flows, say with that laddered strategy we talked about. So that's the other thing we'll comment as we talk about the portfolio strategies moving forward and separate these, is we'll have the appropriate asset classes based on the cash flow needs. You wouldn't want, for instance, a heavy reliance on asset backs or mortgage backs in a portfolio that you're going to have laddered, because you're just going to have all this money coming in each month. That's more of a strategy for a core portfolio where you're just actively reinvesting those funds. So that's a bit of highlight there. And then if we could just jump to the one next page, and then of course we'll cover as much of this as you like, but these are the popular pages that we want to cover. So you can see here on the maturity distribution, and you can see you've got half of the portfolio right now in that 1 to 2 year area. So once we've created this strategy, making sure again all your cash flow needs are being met, and we're diversifying it from a maturity perspective, you will see a much more balanced maturity structure for the 1 to 12, 1 to 18 month portfolio, as well as with this, we'll call it the core portfolio. What we don't want to have long term is a heavy allocation to any one particular maturity, in this case, a 1 to 2 year, or pick any of these. We want to have a much more balanced approach, but also have it to where you're in that target average maturity by design. So we'll start to see the maturity distribution to be much more balanced as we put these new strategies in place for you. A couple of comments just also for the commission. I think it's worth mentioning your portfolio is highly rated. The securities are appropriate for fixed income investment programs, and you're compliant with your investment policy statement as well as California code. We always just like to mention that because it's important. You just had your audit presentation, and a lot of times in an audit, you get questions on your investment portfolio. So worth mentioning that to you. And I'll pause here, but happy to answer other questions about the portfolio or the strategy in general.
How should we evaluate the performance?
That's a great question. And, we talked about that last year when we first started to build this out. Once the portfolio is in place with these diversified strategies, the core portfolio should be measured against the appropriate benchmark. I think that's what we've decided, is to have a 1 to 3 year strategy, that 1.75 year average maturity. If that is in fact what we end up moving forward with, once that portfolio is structured and is being actively managed, we will show you the performance of the portfolio to that benchmark. We haven't done that right now since we're trying to reallocate securities into these strategies, but once that's all set, you will see our performance against the benchmark, and the benchmark will be very similar in both maturity or duration as well as an asset allocation. And we'll be sure to report that.
When do you expect that to be?
To have the portfolio in place?
When we'll be able to evaluate?
I'm hoping in the next maybe 2 quarters. 2 things need to happen. One, we need to diversify the securities that you already have and make sure we get the liquidity. Once that's in place, our recommendation is to never just sell the existing securities so you can get that portfolio in place right away. Just because it typically involves a lot of gains and losses depending on where the market is. What we would like to do, and in talking with the city, we would strategically reinvest over a few month period to get that portfolio in line with where it should be, and then that's when we would be measured against. Now, we will certainly talk to you and share and provide information to the city about what we're doing, and in fact, we intend to have calls maybe monthly with Jesse, especially as we're going through this initial process. Once it's in place, though, we'll show you that performance again, maybe 6 months, 2 quarters.
Yeah, I think going on to Deepak's point, I think would be useful. We did talk about it, right? So what you guys are doing, make sure I follow it, is you're going to bifurcate this and you're going to have some more liquid buckets. And you're going to say, we're going to stay pretty short on that because you guys have said you're going to spend it, which is fine. That's ultimately up to city council. They want to spend it. Then there's going to be the remaining piece. I'll make up a number, $40 million, that to make it sound more grand and important than it is essentially the municipal wealth fund. It's the reserve fund. It's the, only reach in the case of, fire, earthquake, whatever.
Right.
And then you guys, we're going to decide how we want to manage that, to Deepak's point, which I think you guys are going to tell us if we ever get back to a yield curve that makes sense, and we're slowly getting there, we're not there yet, that duration will equal risk and will also equal return. So I think we're going to just have to make a judgment on duration, and then you guys will have to tell us, having made that judgment, who has the right index that you're going to manage against, and then put this in place. Is that a reasonable process?
Yes, sir.
Well done.
One other question, this is for my education. So looking at the S&P rating distribution and comparing it with Moody's rating distribution, I was surprised the difference between the two. Is that pretty common that S&P seems to be more stringent in the ratings?
Okay, you bring up a great point. So you're on the ratings page, and the reason why you see that drastic difference between AAA and AA is because Moody's, as you recall, downgraded agencies more recently, but 12 years ago now, 13 years ago, they downgraded the treasuries to AA+. Moody's has not done that, and so you'll see a much higher allocation to AAA with a Moody's rating because they still have the treasury and these agencies at AAA.
Thank you.
Yes.
Yeah, so if you look at 40% of, I think 40% of the dollars are in treasuries.
Yeah.
So that's your pie chart.
Right.
There's a disagreement on treasuries.
Yes. Great question.
Okay, much easier than making us $500,000 a quarter. So
Yes.
it's the $70,000 quarters.
Bob and I will share with you.
I'll ask one more, which is going back to the portfolio overview. This is a very small amount, but what is this net amortization accretion income, which is less than $3,000? It's not a big deal, but why is there a negative amortization?
That's a great question, and that really ties into the amortization of these mortgage backs and these asset backs, in this portfolio, because they pay principal and interest each month. depending on the way the yields work and the book yield of that original purchase, it's an accounting of the pay down in essence to keep the book yield the same throughout the life that you're holding that particular bond. But it has everything to do with just the payments each month and what the market yields are doing. So it's a book versus market. And so some months you'll see a negative, a net accretion versus a net amortization. Amortization meaning negative, accretion meaning positive, just simply taking the premiums and the discounts of the bonds within the portfolio.
Thank you.
Yes.
Any other questions?
Well, we'll look forward. We look forward to seeing you in person here in the near future. Bob and I appreciate the opportunity to present and answer these questions. I'm excited. We've had a number of great conversations with the city recently, especially, and I think we've got a great plan in place. And with that, Bob and I are looking forward to taking those steps, and we certainly appreciate our partnership with you all.
Thank you very much.
Thank you for your
time.
presentation. Very good.
Thanks, guys.
Thank you. Have a great evening.
Okay, the next item on the agenda is.
Sorry, before we go on, one of the things that the commission does each year is review the investment policy. And so it was last updated a year ago, and so there may not be any updates, and that's just fine. But it is stated that we have an opportunity each year to go through it or look through it. And so if there are any changes or any thoughts, questions that you have, now would be a good time. If you are looking at it in the future, there's nothing that says we can't bring it back and propose changes to it.
There's a policy in our packet.
Yes.
On what page?
368, sorry, 364.
364.
361, it starts with the exhibit A, which is part of the.
Yeah, so I looked at it, John. My straw man on that would be everybody can have their views. I wouldn't touch it, but I'd tell John, you're going to come to us with what your strategy is, what you want to perform against, and does this investment policy give you enough latitude, you think, to achieve that? And do you want to change? And I'd kind of leave it alone unless they come back to us and say, God, we'd really like to buy some more of this, or we'd like to do something else, and you guys will make more money if we do it, and we can say yes or no. But I'm a little reluctant to fuss with it until they come back, and I'm cautiously optimistic they'll say that it gives them enough room to do what they need to do. But that's just, we touched it up a little while ago. It looked pretty appropriate to me.
Yeah, I think they made some recommendations a year ago, which we accommodated, and should probably just give them a chance.
I think it's all going to boil down to how much duration they want us to take and how much appetite we have for fluctuations in the value of those bonds.
I thought we got the super nationals down. It still says 30%. I thought we agreed.
That's California code. Our limitation is 10%, right?
Oh, let's see, who is that? California limitation. Oh, I'm sorry. I read right. You're right. California 30%.
So I hear a consensus that we keep the investment policy as is, and we'll review when if there's any changes from the recommendation from the.
Yeah, we'll work with Public Trust and bring back any changes if they, as was stated, if they say, hey, you can earn a lot more if you do this.
Yeah.
Okay.
Sounds pretty reasonable.
Okay.
We go on to the next item.
All right. So this is our mid-year budget update, and I'll bring up the presentation really quickly.
Is this in our packet as well?
The presentation is not, but the information that I'll present is in the packet. I thought it would be easier to have a couple of slides to talk to rather than just.
And for Commissioner John's benefit, the staff memo is at pages 376 and 377 of his compact. I'm glad I didn't print
It's only 411 pages.
In fairness, more than
3 days and the Super Bowl.
in fairness, more than half of that is the act. Okay, so and the mid-year budget really is I would say a continuation of the discussion on the ACFR. It's sort of the second half of the conversation. Some highlights for the current fiscal year. We are anticipating all of our budget projection, all of our actuals to come in around what our budget projections were. This particularly in the general fund, we don't anticipate any deviations other than what is the adjustments that have been included in the item. We do anticipate we'll have an additional surplus at the end of the year. I couldn't tell you exactly how much, but revenues are trending up, expenditures are trending flat or down, and so I would anticipate another additional surplus. It may not be the $11.5 million that we had last year, but I would anticipate a good amount. And we're continuing to maintain our healthy reserves. The city policy is that we have at least 20% of our operating budget as a reserve. I think we are currently at 60 or 70%, but we're going to propose spending down some amount of that. So
spending or moving it to other.
Moving it to other. Sorry.
Seemed like a big party. Yeah.
What's your current stance on the picture?
Is that the number 5 on the
agenda? Sorry, jumping ahead.
Okay, and before we leave reserves, that city manager dude has from time to time suggested maybe the 20 ought to come up, especially if we're going to put our head down and do some capital spending and create some risk. So is he given any further thought to that?
And that will be reflected in this slide. You're exactly right.
Your foil. Keep going.
You're exactly right. So as I said, the city's operating or policy is to have at least 20% in operating. I will tell you, city management's philosophy is we want to have significantly higher than that. Whether it's 30% or 40%. We are currently, we have a healthy unassigned fund balance of 27, almost $28 million. That's on top of the 20% of operating reserve. As I said, we had an $11.5 million surplus. We are proposing some transfers of that, assigning it to various funds. I have listed those there. The first three, the PERS fund, the facility maintenance and the vehicle, the vehicle fund, the fleet fund. We had proposed those transfers or transfers of those dollar amounts using this, the previous year's surplus in the current year budget. So we are continuing that proposal of $5 million to PERS, $2 million to facility, and $1 million to fleet. On top of that,
fleet, educate me, because I thought we cut the fleet budget over the summer, and now we're putting the money back.
We're building it back.
Okay, that's good. And we're going to create a chart with vehicles, mileage, replacement costs.
We're working on that. And,
okay.
Sorry, as of so it was the fleet was cut, and now we're putting it back. And then the last item is $500,000 to our liability fund. This is for any unexpected claims that may come through. We've slowly, I mean, it's been years since we've put money in there because we've been slowly paying it down. And so we're going to put a little bit extra.
How much is in there now?
Currently it's about $780,000.
And so this is liabilities outside normal insurance coverage?
So as part of our insurance pool that we are in, we have, it's called a self-insured retention. It's you can think of it as a deductible of $250,000 per claim. So currently we have 3 claims worths. If it didn't hit that $250,000, once it hits that $250,000, then the insurance takes over and pays the rest. So right now we have about 3 claims worth. I'd like to have a little bit more, just.
Sure. No, that's sensible.
And you know, it's also something that we are, we budget for as well, from the general fund each year to put into that, so we can pay our premiums and.
That money sits in the bank? Does that money?
That's part of the 50, what did he say, 52?
Or public trust manages that money?
It's all part of the cash and but it is assigned rather than unassigned, right? And so that leaves $3 million that we are proposing to leave in the unassigned, as unassigned, as Vice Chair Richmond was stating. Our philosophy is we want to have more than the 20% operating reserve. We do have some significant projects that may be coming forward, and so having a healthier amount in case we need to start spending. So that would raise our unassigned fund balance from about 18 to 18.5 to 21.5 after these proposed transfers.
And the process for getting that 20% up is city council has to approve it, or is it here? City.
So raise the city.
The policy of 20%
Yeah.
of the operating budget.
So that is a city council policy. So if we wanted to raise it to floor of 25%, then council would have to do that. Now, again, the 20% is just the floor. And I would say it's a soft floor, because there have been times where we've had to dip below the 20%, and then as soon as we then work to get back up to the 20%.
It's a goal.
Yeah, it's a goal. But again, there's nothing that says that, you know, the policy doesn't say that we can't have more than 20%.
But are you proposing that city council should raise that 20%, or the city should just, the city staff should aim for a higher number?
Yeah, we're not proposing to change the percentage. It's just, as city staff's philosophy, we're keeping extra dollars.
Yeah, so is that 20% like an industry standard, like cities do that, or, you know, where does that 20% come from?
Yeah, I don't know the industry standard. I do know, so it's GASB, or it's the state that says you should have about 2 months worth.
Yeah, I saw that in the audit, right? We have 10.
Yeah, we have 10 months. Most cities, I would say most cities are probably between 10 to 15%. I would say 10% is really, really low, and that's cities who are really struggling financially. Yeah, I would say most cities strive for 15 to 18%.
What about small wealthy cities in Silicon Valley? What's the standard there?
Yeah, I have to check to see where some of our peer cities are at.
Yeah.
In terms of
Okay. It'd be good to understand, you know, where the number comes from.
I will say I was here when I was here when the city council raised it from 18 to 20%, and that was about probably over a decade ago. So it's been a while.
Yeah, sounds like it's a good number. Seems to work.
Okay, so this is one half of our mid-year budget adjustment that we'll propose to the council's use of last year's surplus. The other are changes to current year.
So can you go back to the prior slides? Sorry. Just make sure I understand. The PERS 5 million, PERS today is 0. Is this
correct? So
this is going to create a new 5 million bucket. We cleared the rest of it out.
No, so PERS right now is at about $1 million.
So this will take it to 6.
Yeah.
And then you guys still have to decide that some of that's in the material, whether you want to send it up to the empire that is Sacramento or create a trust, right?
So we all have to decide that, and that's, so that's part of the next item.
The next thing that wasn't on this, where I was confused whether it was double counting or whether it's $1 million in each. Because in your memo, you had $1 million going to replenish workers' comp.
Yeah,
And then you talked about another $1 million in the mid-year. Is that really 1 + 1 is 2?
that's one. Okay, I apologize if I stated that incorrectly.
Okay.
Yeah, so
Because 2 was gonna be a lot of stub toes and people losing work days.
correct, 2 million is too much, and I again, I apologize if that was confusing. The proposal is to have 1 million from the current year general fund go to workers' comp. And that's, again, to cover any potential claims, similar to the liability, it's to cover any claims. We do have some current claims that are outstanding that we're paying down and whatnot. So, but again, that's from this current fiscal year, not from both.
And that's probably because the table, now that I'm looking at it, added up to 12.5 million instead of 11.5 million, because the 1 was in the wrong spot. Okay.
Sorry.
No, it's.
I apologize for that. The other.
Once the money goes into one of these buckets, it cannot be reclaimed back, is it like?
It can, I mean, so technically it's all, even though we're assigning it and reserve, putting it in a reserve, it's still general fund dollars. So council action could say, hey, we have, an extra amount of money in this fund, and so we want to move it over. It's when it gets to be funds, dollars that come in restricted, that's when we can't really move around. So a park in lieu park funds, those come in to the city, they're designated for the use of park. And so we can't transfer those dollars to the general. But these dollars will go into these funds, but they're general fund funds, and so could be used, could be moved back. So for our current year adjustments, expenditures, I talked about the workers' comp fund, $1 million, $98,000 for equipment. This was a previous year's, it was approved in a prior year that in the changing over the year and whatnot did not get rolled forward. So we're needing to reallocate it for this year. $50,000. This is from a directive from the city council that they gave us just last month. And so that is to do some surveying and exploring of a real property transfer tax. And then $500,000 for development services. This would be plan checks, plan reviews, etc. I have highlighted that number yellow because that number is equally matched to the revenue. Simply put, we budgeted a certain amount. We're finding that we're actually going to do, in terms of development reviews, we're finding that we're going to actually have more. And so we're needing to budget more, but this is simply dollars that come in and then are paid directly out. So if the revenues don't come in, the expenditures don't go out.
But a really good leading indicator for property taxes 2 or 3 years from now.
Exactly. So it's a sign of the development that is going on. The other 2 general fund revenues, these were unexpected. I say unexpected, they were unexpected for this year. We would have expected them in a prior year. The first one is the LEAP grant reimbursement. This is a grant from the state for that we received when we were doing our housing element update, which was in 2023. We would have expected the funds to come in the previous fiscal year, but we did not actually receive them until November, and so we're having to record them for the current fiscal year. And then the almost $500,000 are legal reimbursements. This has to do with a lawsuit and our insurance company paying a portion of the legal fees. And so we had already paid the legal fees, and now the insurance company is reimbursing us for those. And so again, was expected but not expected. That makes sense. Both of those came in November, and so we are adjusting our general fund revenues.
to John's question earlier, that means the state and insurance companies are slow pay.
Yeah.
Things we already knew.
Very much so.
Yeah.
And then the last item is a transfer of PIG funds. These are restricted funds. They can only be used basically on our city council chambers. And we've had some AV issues that we're trying to address, and so it's a allocation of $50,000 PIG funds. And that is it. So those are the proposed adjustments for the year. I not to sound not to brag or anything. I think it's a reflection on the city council and city staff properly budgeting at the budget time, that we don't have more adjustments beyond these.
Did you consider any projects that may not have been prioritized at the beginning of the year, or any capital expenditure, roads and streets, or anything of that sort that should also be in the purview of this adjustment?
That's a great question. I will say we did not, and a lot of that has to do with what we feel we can get done, the projects we feel we can get done within the fiscal year, rather than allocating dollars to a project that we don't have the staff to start. We'll save that for the budget process that's coming up. The projects that we had previously budgeted for the current year, I think staff feels are appropriate. There may be one or two that we don't even get to, and so we'll have to rethink those.
The bottleneck there is the bandwidth of the staff, the city staff, not the cash.
Yeah, it's not the cash, it's the staff. Yeah, there's a lot that's going on and a lot to do, and so we're trying to work through them as best we can.
I'm curious, $50,000 for AV maintenance. What's happening there?
It's so we work with KMVT, who is a local company that does they broadcast they come in and operate the equipment during our council and planning commission meetings. They have estimated that, for our various hardware and software, they can upgrade or update the equipment there that has been causing us some problems.
PIG funds are from the cable companies.
Right.
The bottom of your
Cable companies. So that money that they pay into what's called a PIG fund. And so the public TV station airs the council. And so that's their money to get the cameras and whatever they need to do to broadcast it.
We've had some issues with city council meetings where the computer that hosts the Zoom meeting crashes, doesn't work. There's issues with the audio and whatnot. And so they've
The reason I brought up the question is 50,000 can buy a fair bit of hardware, but maybe there's more to it than I'm following.
Yeah.
So
you're right. Unfortunately, some of the hardware that we have to buy is pretty it's solely focused on, it does this one function, it's specialized.
It's not Los Altos doing is the key. It's outside money. It's the PIG money from the region here for cable company fees. So if you have cable TV, there's a PIG fund you pay into. So cities of Sunnyvale, Mountain View, Los Altos, they all pay into this fund, and that money's coming out of that fund.
And as was stated, it can only be used for this purpose, so.
All right, this is all pretty simple. It also implies that the bigger stuff you're doing, like Lacey, like Gabe's big generator and that sort of stuff, that's all kind of coming in line with what you had budgeted, because nobody's coming back asking for more.
Right.
All right, that's great.
Oh, good stuff.
All right. So that is it.
Okay, so the next item on the agenda is probably the favorite, the PERS reserve discussion.
And I don't have a formal presentation, simply because I've given enough presentations on this, I think. In your packet, I did include the numbers from the last time this came, which showed, kind of where our liability is at right now.
That's 47 million.
Correct. And let me actually call that one up if we want to talk to that one. It's about 47, 48.
Plus a little in the new fund. For whatever reason, I have 52 stuck, but let's call it 50 among Brett.
Yeah, so, and again, remember, this is because, we can't make it easy, sorry. This is FY 22 data, because that is the most recent data that they have given us, for the actuarials. So currently we are, well, say currently, but again, as of 2.5 years ago, we are funded at about 71.5% of our pension liability. The question that is we are proposing is what is an appropriate percentage or target percentage for us to fund our pension liability at. As we've stated in previous meetings, we don't want to be at 100%. We don't want to be at 95%. But what is an appropriate amount? Of course, even to get to 75 or 80% will take a significant investment, and will take years before we can get to it. But if we have a target in mind, that will help us as we are budgeting in the future to make sure that we are continuing to put money into our PERS reserves so that we can then send it to pay down some of our unfunded liability.
What number does staff recommend?
Depends on the date. No, I'm just kidding. I think somewhere between 80 to 85% is probably appropriate.
So I'm gonna ask my traditional question. So what's the industry doing in this? Right? What's other cities?
Yeah.
What are the other cities?
Well-run
Most cities are praying for mercy.
Yes.
Okay.
This is actually pretty manageable
Yeah.
relative to lots of what's out there.
And a lot of it depends on, there's a lot of factors that go into this, right? So some cities, back when times were really good, provided the world to retirees, and, some of the retirees from those cities have incredible pensions. Los Altos was one of the early, I will say, was out in front of the pension reform. We actually have 3 tiers, which most cities only have 2. And that's because prior to the state introducing PEPRA, we created our second tier, which has helped alleviate, because if all of the tier 2 were in tier 1, then it would be significantly higher. There are also other cities that, as Tony has said, are just hoping that something happens in Sacramento, that they increase the discount rate and all these numbers go way down, or PERS has an incredible year in which their returns are just incredible. And
Sounds like fantasy or wishful thinking.
Yeah.
and
Hope's
that's-
not a good plan.
Yeah, even though, to be fair, you saw what the auditor put up. These numbers are breathtakingly sensitive to relatively small interest rate assumptions. So,
Do you know what cities like Mountain View, Palo Alto, Sunnyvale are doing? Because they're somewhat comparable to us in their
yeah, let me
geography.
they're actually not comparable. Palo Alto has a pretty big problem. The reason Los Altos is in okay shape relative to them, and John, you can tell me I have it wrong, but I know Palo Alto is a big problem because Los Altos had the good fortune of being small enough that there's a lot of functions that they didn't insource. Palo Alto's pretty heavily insourced. You go by that big maintenance yard on 101.
Sure.
Got a sewer system and whatnot. And the people who have the biggest problems here are heavily insourced, where rather than contracting for a service, garbage, for example, they get their own garbage company, and all those people are in the PERS system. Those are the people who are in really the toughest shape.
They're also, all three of those cities have fire departments.
Yeah.
Which, the reason this isn't, I'd say, 50 to 60, the 48.4 million isn't 40 to 60% higher is because we don't have a fire department.
But don't we, isn't that a cost of the fire department? Because our fire department goes through the county.
Yeah,
So
but
does the county get us with that?
Well, but yeah, so that's part of the fire contract, but that's not part of our liabilities here, right? So,
So, I mean,
the county is responsible for those pensions.
Just kind of curious, are there smart people, consultants or whatever that come and tell you what these numbers should be, or is this, I mean, is it a guess, or I mean, how do you talk about this?
The best way I can put it is it's a guess, right? So, you know, if you were to talk to people in Sacramento and PERS, they'd say, yeah, you should fund it 110%. If you were to talk to the expert or the consultants from PARS who do the trusts, they came and presented to the commission. They would say, no, this is a good amount, put it all in a trust, right? So a lot of it depends on, there is no real expert or consultant out there who is saying, yeah, this is the way cities should go. This is the right mixture. A lot of it is, I'll say, a combination of your risk aversion coupled with your tolerance and your ability to absorb significant increases. As we saw, you know, the PERS dropped the discount rate in 22, 23 timeframe. And what that did was it caused our out years UAL payments to go up almost $2 million in future years, right? So if you're an agency that can absorb that kind of increase, you may say, you know, 71.5%, we can do that.
So if I'm
sorry, I apologize. This was 22. We have 23. That's why the numbers weren't looking exactly right. This is
There's the 52 million.
This is the salary.
So that's a different one.
So 71%. You know, so if you know you're an agency that says, well, we can absorb, you know, a few $1 million in additional payments each year, you might say 71% is fine.
Where's the 6 million for us?
I would have to call it up. I believe 6 million. Well, we looked at 5 million.
5%.
Well,
won't that get us
16 to get to
74%?
80%.
What's
So
that?
half of
Won't-
that.
I mean, if we put 6 million here,
Mhm.
would that not get us to, I mean, the market value of assets 146 plus 6, would that get us to 74%?
74.3 rough
Well,
numbers.
16 million will get us to 80%. So half of that is about 8. And that'll get us to 75, ballparkish.
So
We put ourselves at a disadvantage if we put the money there, because if this is a very widespread problem, it's nature of government that, you know, people who are taking care of things, they get dinged at the expense of people who are not taking care of things.
well, so one of the things to keep in mind is our liability is not affected by what other agencies are doing. And so if we're doing well and we send money to Sacramento, but, you know, Palo Alto is saying, no, we're not going to send you any money, and their liability keeps shooting up and up and up, that will not affect our UAL or our standing. The bigger issue is if PERS's investments don't do well, that's when these numbers will change, and so it's less what other agencies are doing, it's how
Yeah,
PERS
but-
performs.
I mean, if it's a widespread problem, I just have a hard time imagining that somehow those cities will have to, I mean, they're not gonna come up with a boatload of cash overnight anyway, so the problem has to be solved somewhere, somehow differently, and if it's a solution for those cities, why won't it, I mean, maybe California will allocate funds from its own general budget to cities to take care of the problem, and because we are well funded, supposedly, if we increase this number, would we be at a disadvantage in getting that money?
I don't think we would be at a disadvantage. You know, again, if another, I would hate to say we should not make payments and we should make our UAL on the hope that the state will step in and, you know, because I think as Tony was alluding to, these cities that are holding out hope for some sort of rescue, they're not gonna get it. Like I don't see
These sorts of problems. I mean, the other thing to keep in mind about pensions, right? That I don't know what the annual call of your retirees is, but make up a number, John, $6 million, $8 million, $5 million, whatever it is, right? It's a long time in the future before you're really short, which is why this problem keeps getting kicked down the road by everybody, which is, I mean, it's sort of like the Social Security thing. You could put no money in it. And it's 15 years. That's a bad example, but here I'll bet you it's 15 years before they run out of money if you put nothing in today and assumed investment return. So this is just about whether, to me, this is the question is, do you pay as you go and fill the gap as you go, or do you try to get in front of it? I think you try to get in front of it to some extent to remove the illusion that you have more municipal wealth fund than you really do, because some of it's already gone. Next bullet. I thought there were some CalPERS whisperers, because what bothers me about this is 23, 24 was a rip in investment year. Inflation slowed down. So I'll bet you this number came back a little bit. They just haven't told you what it is yet. That would be my guess. And then the last rule of thumb with these guys is once you send it to Sacramento, you can never get it back. It's gone forever. So I don't know what you guys, to Scott's point, left to your own devices, what would you like to do? And then, you know, on this topic, as you know, as I'm fond of saying, there's more opinions than there are people on this side of the room. Just give us time. But what do you guys want to tell the city council to do with this?
Yeah, I mean, as I said, I think if it were up to staff, we would target somewhere between 80 to 85%. Of course, that's going to be over time. I think it's not a great comparison, but the best way I can describe it is PERS is treating the unfunded liability as a loan that they're requiring the cities to pay off over.
Are they charging interest on it?
No, but that's where if the discount rate gets, you know, it depends on the actuarial, and so it's not a fixed payment each year. The payments go up because PERS says they go up. And so this isn't a dollar amount that we will have to pay off at some point over the next 20 to 30 years. And so if what we have seen is if we are sending, you know, if we make prepayments on it, then our future, you know, required payments go down. The amount that we have to pay annually will go down until they raise the discount or lower the discount.
I like Tony's comment that by paying some of this off, it reduces our sovereign wealth fund, which also, since we're in a good cash positive situation, it will keep people from just spending it in the future and not taking into account this liability that we do have. So it probably makes sense that I just looked up, according to my math, the 5 million will only get us to 73.5. So to get to 75, we got to be closer to 8.
So the city funded $5 million below a year ago, before this.
A little more than that.
Yeah, 2.5 years ago.
2.5 years. I don't know if some of the folks right now here were in finance commission at that time and what the reasoning or the decision-making process was like at that time.
It was, Deepak, it was pretty simple because you've outlived everybody who was around. I was not around when the 5 million was reserved. And we spent 2.5 years saying, guys, the worst of all worlds is that the 5 million earning 3% when you would buy down 6.9 or whatever the discount rate is, send it up there if that's what your intention is to do. And that was with a lot of comings and goings of people. So putting the money in predated me. We were mostly just, okay, get it out of here, buy it down. And now I think, and cash was kind of tight there and people had some eyes on bringing it back. We said, get it out of here. Okay? So I think what John's trying to do is get in front of it with some policy sense. I would be curious what people think really happened to the number, but let me give you a total straw man, okay? If it were me, outvoted by all these opinions, I wouldn't fund Sacramento beyond 80%. I'd walk my way to that, and anything beyond 80%. Is it 115? I'd put it in a 115 trust. So I control my existence.
Yeah.
And then you can draw a judgment on a go-forward basis, whether from an investment return, effectiveness of PEPRA and so on, that these numbers actually fall in line, but then you have some control. Because the advantage of the trust, in my mind, is even if you match the CalPERS investment returns, maybe you do, maybe you don't, but you basically go, I'm going to be pretty similar market return. At least as I understand the advantage of the trust is if we ever get tight, we can't bring the trust money back, but we can use the trust money to burn your annual obligations anyway. And so it effectively becomes a CalPERS reserve, but a CalPERS reserve instead of the 5 million we had that was earning nothing, one that we can expose to a real long-term return. But if you guys think you want to use the 6 to start marching to 80 on the board, that's okay. I don't think I'd finance them beyond that. I think these numbers are going to be volatile. This is really long-term stuff. You guys have some money. City has some flexibility. And I think the reward for financing and that kind of the state of care and kind of the public industry world. I have familiarity with one of the big airlines. I think their view is we fund at about 85% because we never want to be overfunded. The number will be a little bit volatile with rates. And, we're nowhere near being short. That's plenty under ERISA. We're all good. So you guys got to think about it. But 80 feels like pretty long march from where you are. I still think you're going to get some of it based on what the market returns have been. And then I probably want some more control rather than go more. But that's my, people can shoot at. That's just the trouble.
What's the rationale for doing 80 with Sacramento and doing trust after that, as opposed to doing trust from this point on itself, even if we're going to march 80?
Here's the super interesting, and if I was king of the city, I'd put it in the trust. Okay, so here's the problem with the trust is, and if this just politics is the wrong term, but it's kind of local policy and whether you have the stomach for it, right? So you will then control the investment policies on that money, and you'll hire people to do it, but you'll control it. Are you going to be 60-40 equities? You're going to be 70-30. You're going to throw it all in equities because it's long-term money, but you're going to have to make that decision, and you got to hold. It's going to move up and down. And so the question is, how much appetite do you have for that when you're 71 on the board? Would you rather buy the 71 up to 80-ish and then go, now I have some stomach for it because this hole isn't so big and my represented employees aren't getting agitated because they're seeing 71 and they're unhappy about that, even though the government makes up for it. So My proposal is admittedly halfway to nowhere, but you have to, in the trust, you have to own that decision because they're not gonna, whether you hire these guys or Morgan Stanley or Goldman Sachs or send it to BlackRock, somebody's gonna wanna say, give me the index you wanna hit and how much risk you want. So somebody has to own that decision. You send it to Sacramento, the good news is you don't own the decision, the bad news is they do. So pick your poison.
Well, a diversified strategy is good though, right? You're not putting all your eggs in one basket either way. So.
And CalPERS has a super diversified strategy. They have had a knack to go deep into asset classes the last 5 years or so, and then go, whoops, how did we get here, right? They were probably too deep into alternatives. They were surely too deep in real estate. And then they've kind of backed down at both of those because the broad market did much better. And they've been through, I don't know, 3 or 4 chief investment officers. You would know, John, but I think the person there now looks like they have a little bit of footing, but they, for that reason, kept running through chief investment officers. It's a pretty hard job.
What I'm hearing from the commission, and correct me if I'm wrong, that we're thinking 5 million isn't enough. We want to probably go closer to 10 or something higher. Is that what I'm hearing?
I think this is an over time.
Yeah.
I mean, he's-
Over time.
He's looking on a long-term basis.
We want to, the consensus I kind of hear is, the 80% is kind of where ideally we probably would want to get at, and then start to use the money into a trust for the rest of the 20%.
Again, if you guys said we'd ultimately on a long-term basis like to get to 85 or a little bit more, I have a religious objection to it. I just wouldn't fund these guys much past about 80 unless you have a lot more cash reserve than you do, because somebody's going to want to do a big project, and it may be that you need to take a pause on that. And the advantage of the trust is you can take a pause on this, go to the trust. And what's your annual now? 4-ish? But for mandatory minimum. 4 is not enough. Yeah, that could be wrong. 4,
I'd have to look
6,
it up.
maybe something like that.
I have to look it up.
Tell me, how long would you have to get up to the 80%? What time frame?
How flush do you feel?
I mean, I think it'll just depend on a lot of factors. I think the intent is not to say that we will get to 80%. I think that's more of the aspirational. When we are doing the budgeting each year, we will say, okay, we're going to dedicate this amount to go to our PERS reserve. That will help spend it down. As Tony was saying, we'll get the 24 actuarial data probably in September or October of this year. And that may show that we've already, fingers crossed, it naturally goes up 2% anyways. And so, we may find ourselves at 78% and say we're actually in a good spot. We don't want to go up
2%, buy it out.
I like that.
Take the money.
They come back and say we're at 68%.
What time frame to get to 80%? Because I like Tony's number, 80%. It there's no science behind it, but it feels right.
Yeah, and again, there's other factors that I can't say exactly.
10 years, you think?
I think 10 years is probably too long. If I remember right, it's going to be about 2032 or 33 that our UAL payment hits its max, and then it'll start coming down. So 10 years.
Well, maybe we just make a decision for this year and revisit it next year. So if we can get it to
So we've
74,
got 16 million bucks. If we say our target is to get that bought down over 5 years, and the 16 already spotted you 6, so you got to find 10 over 5.
Yeah,
You can find that in the seed cushions.
That's probably, so 5 to 7 years, I could see us.
Yeah, especially if you do 5 this year. So
or
yeah,
6.
6. He's already got one.
6, okay, you're right, let's just check this.
So why don't you talk to, he's a straw man if we'd like to get to 80 in 5 years, and if we get there, my straw man would be, let's try to get to 80 at CalPERS over 5 years, and when we start marching north of that, I would seriously consider putting in the trust. That's just,
No, I like that.
and he may have a reaction.
Very sensible. And so now we've come up with a time frame. We've said 5 years, let's get to 80% and make it an aspirational goal.
Of course,
Pretty doable.
nobody's able to predict the future and what the discount rates are gonna be. Well, I predict it all the time, man, wrong.
Okay, perfect. Yeah, and this is, I anticipate this will be something that will keep, top of mind with the commission and staff as we go through and maybe
Let's get some of those new pepper people in here.
that is one of the benefits when a classic employee retires and we're no longer, building a liability. Okay.
Okay. Okay, we have the key performance indicator subcommittee report and commission work plan. It is 8:03. So I don't know if we want to try and get through the rest of the agenda items today, or do we want to hold them for next time? But I guess the last one, the commission work plan needs to be.
I'd like to make sure we're finalized on that one for the joint meeting on the 25th.
Yeah.
But even the subcommittee report, isn't that a prerequisite for presenting the sub-council?
It could be. Yeah, I mean, it definitely could be. So, I mean, do you guys want to keep going?
I'm good with.
Okay.
I don't think it take that
We'll
long to
restrain the
present it.
questions.
No,
You can present in about 5 minutes.
Yeah. Okay. So why don't we go with the next one? John, can you put the slides up? I'll go ahead and talk for the committee for us on this. And so what we're trying to do here is we were initially looking at what are some of the KPI, key process indices that cities should be looking at from a financial standpoint. And as we really dove into this, it was really a lot about the whole idea of providing transparency around financial information. And what we really, in looking at other cities and looking at what has been done, in the industry itself, there's a lot of work that's been done on transparency for the finances. And the vision here is really having anybody within the city of Los Altos to understand where any of the dollars or tax dollars are being spent and how they're being allocated. And that cities that are well-run cities are very transparent about what they do. And so next slide. And so why it matters is that it builds the trust within the city, and that people, there's no mystery about what's happening in city government and how their money is being spent. It enables an informed decision making for the city. So residents understand, what the financial data is, and that they can provide the input and understand that they're part of this whole process in terms of the decision making for the city. And it really aligns with best practices, right? This is how the best cities in the US run their cities, through these transparencies, through these systems that allow everybody to see what's happening within the finances. Next slide, please. And so what we did was we looked at some of the cities, what's going on within around us, right? In terms of being able to do a comparison. Look kind of nationwide too about what cities are doing, but what we're finding is that even just within Silicon Valley and the cities around us, they're allowing their residents to be able to see all the information that they need to have for financial information. And it's really about open governance for financial transactions. So Cupertino here This is just their homepage, the web page that you can go in there and click and see all the different information and drill down into that information for the city. Next slide. Palo Alto does the same thing. So I did a picture here in terms of them showing the graph and the charts and all the different revenues. I think this is revenues and expenses that they have there. And you can click on here and dive deeper into the data to find out exactly what the revenues are, where they came from, what the expenses are, who was paid, and all that kind of valuable information for that for each of the cities. Next slide, please. Redwood City, so they have what they call the budget transparency portal. You can click in there and see all the information that they would want for how they're going to be spending their money for there. So if you look at these three cities around, they're already having usually open governance and being able to provide information for each of for all their citizens. Next slide, please. So what does Los Altos look like? So if you go on the Los Altos website and try to find all this information, so there's a report that says, this is what, our annual report is, right? In terms of what it was spent. But there's no real detail around, how it was spent, and specifically, the line items, right? In terms of each of the items that are being able to, that we can spend. And it's not timely, right? So it's not like real-time information or near real-time information that residents can see what's actually happening within the city. And when you do a comparison between Los Altos and these other cities, you start to see, whoa, wow, okay, so Los Altos is easy and clear as what we see the other cities around the Bay Area are. Next slide, please. So our proposal is really straightforward. So we really wanted to develop a financial measure and transparency system. And it's really to create a centralized area where all the key financial data is accessible for everybody in the city of Los Altos. And we want to be able to have KPIs so people know the overall health of the city right away. You go in, you can look and see, yeah, our revenues are doing great. Our expenses aren't too high. We know exactly how the city is going. And this is really just having a scorecard, right, for the city. So that is the good, the bad, and the ugly, right? You can see it all that's going on. And I think Tony talked about how we used to get a regular report, right? The city would send out those informations that everybody would take a look at, and everybody felt, yeah, this is what the city's doing, and we understand it. Next slide, please. And so we really want to talk about that you hear a lot about data governance, right? Data-driven governance, and we believe that this really supports us in being able to do that by endorsing the financial transparency initiatives. We really think that this helps the city move forward and create world-class governance for the Los Altos. And so what we're asking for this commission to do is really support our moving forward with developing the systems and infrastructure necessary to have this reporting. And we don't have to do this development ourselves, right? There's a lot of software out there in the industry that we can leverage and be able to present this information in a really easy way, friendly and easy way to our constituents and to the residents of Los Altos. And so I'm asking for this commission to vote on approving the financial transparency governance and proposal, and for us to ask the city council to do that.
A comment also, as we're implementing the Tyler technologies, it's very likely they've already have all these packages. So it's not going to be any once we get these set up, it's not gonna be additional work for staff. But it'll be tremendous for the citizens and for the open government.
Questions, comments about this?
Nope, looks great. Yes, spent a lot of time. I've been, to John's point, I assume, just like with one of the other providers, company called OpenGov, there's gotta be some APIs that just do this,
Yeah,
right?
yeah, I think
No,
so.
nobody's out writing these reports
Nope.
on their own to post on their website. This has all gotta be driven by some backbone piece of software that then you
In
have.
fact, most of the cities use open governance
Right.
around here. I mean, it's not Sunnyvale, Palo Alto, Redwood City.
And I know a number of them use Tyler Technology, so I have a feeling simple call to Tyler, and it's just a flat problem.
But I think that, I said that we need to be prepared for an investment, though. I know it's not gonna be free.
No,
Right.
it'll be some add-ons.
Yeah, there'll be some add-on to be able to do that. But I don't think it's gonna be crazy, right? I think that, and I think the benefits outweigh the cost quite a bit for that.
I can't believe it will be more than 50 to 100,000 max.
Yeah.
And,
Never underestimate the ability of an ERP provider. Price add-ons.
That's true.
And then it'll be on a
you
subscription
want that?
basis. And then it'll be on a subscription basis, so let's be realistic, but I don't think we'll go any crazy.
Yeah.
Jesse doesn't strike me as a do crazy sort of finance director, so I think we're safe.
Yeah.
Do you want to vote on it?
Yeah, any other thoughts or comments? I'm also interested in your guys' thoughts and comments too.
Yeah, so I mean, from my perspective, I was promised that our current ERP system will allow us to have a public facing dashboard, and I was excited for it and pushing for it, and was very disappointed when I was told that no, that wasn't going to happen. So I've for years wanted some sort of dashboard on the city's website for this kind of information. I think it's a great idea. And an opportunity to provide the information to the public, and so people can see how our revenue's doing, how are our expenditures doing.
Would you be willing to take an action item and ask Tyler how much it would cost? Yeah, ask him what it would take
I
to,
would assume that they have it, yeah.
I'd be surprised if they didn't.
Yeah, I guess I really want to make sure that we have a first-class solution though, so that, yeah, I did see some stuff out there that, wasn't very good in terms of being able to drill down in detail and find out what's going on. I know San Francisco, I was very interested in San Francisco's systems, and they just get to the line item, right? Everything that's going on in that city, they have the tracking to be able to do it. I was very impressed with that, right? So it's nothing, nobody can say anything's hidden, right? Everything is right there, bold-faced. Here it is, whether you like it or not, right? This is it.
It also helps you from a management standpoint, because when this stuff is open on the web, your functions then can look at it, and budgeting and all the transparent makes your life simple. It also helps you when you present to city council, hey, we've got this screen, and you guys look like genius. So.
The city council members can get it themselves.
Bet they can.
Okay, so yeah, I'd be open to somebody to do a motion to propose this.
I propose that we take a vote on presenting this.
And second.
Okay, should we have a formal vote then?
So this is to present this to the city council for them to approve, or sorry, I should have asked before we did the motion. What is the commission envisioning as the next steps?
It's getting the buy-in of the city council that this is the right strategy for the city to move forward and to provide some funding for it.
Okay,
That makes sense.
it does.
Probably funding though in the real world in 25, 26, right?
Yeah, so I guess that's where I'm going with this is, this would be a recommendation in the budget, in the upcoming budget. Because quite frankly, I don't think we need to ask the council if we can do it, other than, hey, we need the funding for it. And so it would be as part of the budget.
We don't have to go in front of them, that's fine.
Maybe more complicated, that the sense of the commission is that the staff ought to budget for this in 25, 26. But I think all
I mean, the
love
other
to be on the
option
record
is
for it.
that if we have an agenda item for the next meeting where the staff comes back with feasibility or not.
Yes, that's a very good idea. And make it like a suit of clothes. Comfortable.
Okay. All right, so
Seriously, whenever you're developing a new system, make it comfortable. You want to have it data rich, but not something that requires enormous amounts of work. Make it so that it's highly automatable. Look at those types of things. You don't want to do a lot of manual inputs because all this data will exist in Tyler. So why can't they just create a portal, and bam, it's there.
all right. So the motion is, it sounds like, is to recommend including funding for this in the upcoming budget. What we will do is we'll come back at the April meeting. We'll have a better idea of how much it will cost. And so we'll report back on that, which will be great because that will be the meeting right before we present the budget to you. So
See if you guys can put in your work plan on the far side of flipping the switch, because I don't think you want this getting in the way of flipping the switch.
Right.
Yeah, yes, exactly.
I also want to compliment Scott on all his homework he did with this. He did a wonderful job.
It was a great team effort.
would you like me to call the vote?
Yeah.
All right, Commissioner Claris,
Yes.
Commissioner Zhang, Commissioner Jane,
Yes.
Commissioner Fowler,
Yeah.
Vice Chair Richmond, and Chair Ottos.
Yes.
Passes unanimous.
Okay, last item is the work plan.
And I'll call it up. It's not changed from the last meeting, other than I added the work of the subcommittee, which almost sounds like it needs a completed or almost completed, or certainly a status update here. Of course, you will be meeting with the city council in a couple of weeks, where you'll have a chance to just quickly go over this. They'll probably ask a couple of questions and then praise you for the work that you've done.
Yeah, based on recent events, we'll get credit for actually doing it.
You have done quite a bit, and I think you should be proud of yourselves and the work that you have done. And so you also wanted an opportunity to provide any direction to the commission or the chair in particular as to what should be presented to the council.
So these are 8 items that we will present on the 25th.
Well, so there's
How many?
12.
12 items.
But you don't have to present. You don't have to go through each item. The city council will have this ahead of time, and so if there's anything that you want to highlight, something that the commission did in the past year, that you want to highlight, something that you're
More
excited about.
informational that has changed type stuff.
Yeah.
Are we also discussing any revisions to this work plan?
If you have revisions, then certainly we can talk about it.
Should we try to fit in that 5D audit report reviews in one of the meetings?
That's not a bad idea. That's a very good idea.
Well, that's kind of that would be new work. That'd be something that we don't normally do.
Yeah, so
right?
that one you're gonna have to take back, because I think the agreement has historically been that not be discussed in a public.
Yeah, what I would suggest is I'll provide an informational memo that will, high level highlight the results of the IT audit, probably indicate how they feel we're doing and how many areas we need to improve on. But sort of as was alluded to, I don't want to get into the
We
various.
don't need to know details, we just need who's doing the audit, what are their qualifications, did they do penetration testing, did they verify the backups and so forth? And any of the deficiencies, we don't need to know.
Well, the question I have is that it within our purview.
And that
Well,
would be.
under the accounting systems, yes.
Right. But IT.
I mean, the other option would be a subcommittee to do this as opposed to discussing this in a public.
That's another option, you could talk to us in like a closed subcommittee. And we can even sign NDAs if you want.
Well, I don't know, we need to get that into it. Yeah, let me think about. Let me think about it a little bit more. Like I say, we're in the middle of the IT audit, it's still.
I think this should be a subject that we add as ongoing, kind of figure out how we're gonna go. It's probably not something we want to talk about in 2 weeks.
Definitely not in 2 weeks. I'm just saying since it's an annual
Yeah.
plan.
I like it.
But I'm just saying,
And
adding
probably the
that.
audit is not gonna be ready for a while, it sounds like. So it's not, even if we wanted to do it in 2 weeks, it's not gonna happen.
Yeah, well, I think there needs to be, I need to understand if we can even do it, right? Is finance responsible for overview of IT? We're responsible for overview of finance and the systems and everything that are supported for
Well,
finance.
comment to that, if we're not responsible, who
I don't know,
is?
but that's what we gotta kind of maybe. build
Because
that
who else would you
consensus
put
on.
it? You wouldn't put it in Parks and Recreation.
No, I don't know,
Yeah.
it's kind of what the city council wants. Actually.
Well, somebody has to review it, and with respect to, and we've had these debates before, I know Tony remembers. With respect to the financial systems, it should be in our preview to look at that.
Yeah, I agree.
Plus, we have folks here who understand IT pretty well. And if it needs, and we totally agree, it should be in some sort of closed session if we get in any kind of detail. But do you want to resolve it tonight or just bring it up?
Yeah, I think we need to get deep understanding about how all this works together, fits together or doesn't, right?
Okay.
And then we can go from there. I'm not comfortable with trying to shoehorn that in tonight, right before we do it. I think it was. Then that can be, if that's something that commission wants to take on, we can start to have that discussion.
So no decision on that tonight. Let's talk about it in the next commission meeting.
Yeah.
Does that make sense?
Right, and then the work you're picking down is what audit work that supports this group cyber policy.
Yeah, I mean, they go through all of our IT systems. Without getting too much into it, they've already sent me a list of probably.
IT procedures.
So they are experts. They've done a lot of the tests and yeah.
But they've written procedures and somebody's verifying to those procedures who does not work in the city of Los Angeles.
Okay. So does the whole commission show up February 25th?
Yes. Yeah. And the best I can say is the joint meetings start at 6. I'm still doing my best to get us towards the beginning. And so, I would hope that would be early enough to get you off for a late or early dinner, depending on when you normally do.
We won't be the 1 o'clock crowd. Is that 25th or 26th?
The 25th, the Tuesday, the 25th, 6 o'clock in the council chambers. 6 o'clock.
Yeah, so and Deepak was the thing, at least, and you decided that I talked to them a little bit about that in my opinion deserves repeating, which is yeah, it's great. We've got about $50 million lying around, some of which really is reserve funds. You have a project list a fair bit longer than that. And so I think the real thought exercise here is how that's going to be financed, because you're not going to do a downtown park and parking structure and a police station and kick some money into a theater. And I've already overspent by a factor of 3 or 4 what's in that. So some strategy needs to be developed as to how that's going to be attacked.
I haven't seen a slide. Do we have a slide that actually has all these aspirational expenditures?
Not that has been put together. I think that's as we have some key decisions that are coming up on a couple of those projects. And so that will play into the upcoming review of the CIP that I think is scheduled for April.
Is the theater still on the table?
It is still on the table. My understanding is it's gonna come before the council maybe next month. Don't quote me on that.
Is it, because I don't go, has it been in front since the meeting in like early December where there was the ask for, John, was it 5 or 10, 5 in front and 5 at the end, that meeting? It hasn't been,
That was the
most recent discussion.
Has the 30, I believe Gabe told me, correct me if I'm wrong, that they had $39 million worth of anonymous funding. Has that been nailed down to be real?
I have not heard that number.
Yeah, I haven't heard that. That certainly didn't come out in this December.
All right, perhaps I misunderstood.
Are you on the theater?
Yeah, with respect to the theater.
Unless there was something else, John. I mean, I that meeting I sat in and they were still working off a $23 million construction budget which is very dated.
Well,
And
also the underground parking structure.
that's not part, it's a separate.
Yeah, I
part
know,
of
but
the
they
theater.
didn't want to put the two together. That underground parking structure, whatever your estimate is, that's going to be expensive.
But in any event, and John, you were probably paying more attention to me. I was in the back, but the theater was talking about 23 million. Everybody thinks that's light. There are, at least as to the proponents, would articulate 0 hard circled. What they asked the city to do was prime the pump with 5 and be available with 5 at the end. So I think the total ask was 10. And I think what was approved was like 250,000 to prime the pump on fundraising. You remember? I mean, I thought
I'd have
to come back with a number.
I think that's part of the upcoming discussion.
Then the request was then at least put up some money to prime the pump for a fundraising function. And I think the city council sounded interested in that, but asked the city manager to go put a fence around what that would cost. How'd I do?
Close? I think so.
Yeah.
I think it would be nice if you had a chart with some of these massive capital things where you can look at also the time phasing of where the spending is so that we don't overcommit.
We can consider that for the upcoming survey.
Especially with the donation to Calico.
So any last comment from the commissioners? Potential future agenda items then? Did we want to put on the IT audit review as part of future agenda?
We do a work plan review because it's not about having the IT review as the agenda item. I don't know when it'll be ready but at some point it'll be nice.
Well, my take is I just want clarity around our purview and whether or not that's part of what the finance commission can do.
How has it historically been, and maybe Tony can shed some light based on the past experience?
I would say historically, it is not within the commission's purview. Historically, the view is not every business function of the city is within a commission's purview. I think the response to that was, at least as it relates to the integrity of the financial system, it's part of that. And when this was last brought up, there was a ad hoc subgroup, which was Gary and me, which had a meeting. I think John was in that meeting. And then the ultimate conclusion was that it would remain undecided for the time being, but on the far side of flipping the switch on Tyler, we had an agreement that the city would, once the system was up and stabilized, that the city would then invest in a third-party audit focused on the new system to make sure we don't have any holes that you just wake up to down the road. And I think the expectation was the commission would have some involvement and assurance that that would take place. So I think that's the totality of the discussions on the topic. You may remember others, but that's not it.
But to summarize that in terms of next steps or actions, does that mean wait till July 1st and then revisit this, or?
I think that's a really good question. My take is it seems like we need to get understand or get formal approval
Yes,
that we can actually be that part of our
I think we
scope.
need to present that to the city council, that we need to have some oversight with respect to the financial systems and IT to make sure that, somebody's doing testing. Backups are verified. Passwords meet certain criteria and are changed on a regular basis, and that
It sounds like a good ad hoc committee thing to maybe work on and come up with a proposal. I like that. So why don't we put that on the agenda for next time then? That makes sense that we'll put together an ad hoc committee to investigate and report or understand how IT may or may not fit into the Financial Commission's oversight. The goal will be getting a definitive statement, whether yay or nay on it.
well, we can present that, what our vision is to the city council, and then they can either approve
Right,
or
exactly.
disagree with it.
Whatever that ends up being. Okay. Anything else?
Not done.
Do we want to move for adjournment?
I move for adjournment.
We have a second?
Second.
So move. Adjourn.
Great.